Hello and welcome to FinextraTV. I'm Liam Sevier and you join us at the Communify Intelligence Experience. With me right now is Ali Bastani, Managing Director at Seven Post Investment Office. Ali, so nice to have you here.
Liam, thanks so much for having me.
Of course. So if we talk about wealth management, we're talking a lot about innovations and changes. What does it mean to be a small firm in this environment?
It's a great question. So our firm manages about $9 billion for a small number of clients. And from our perspective, some things haven't changed at all. You have to have the best people who have multidisciplinary approach to serving clients on investments, taxes, estate planning. You have to generate great results. And what's really changed is that you have to embrace technology. Both the expectations of clients have changed and evolved. They're very high and you have to deliver. And then internally and operationally, you have to embrace technology to make sure that your people are working on what really matters and not wasting time and being efficient. And it's really a big change that's occurred. And we're certainly trying to embrace it.
And how does that big change affect the cohesion between bigger firms and smaller firms? Is it a change in the economy if they're both on the same level?
So from a client standpoint, they're selecting a firm to manage their money. In our case, these are people that have several $100 million, and they have lots of choices. Their expectations are going to be just as high for our firm as it is for a major bank in the United States. If you look at some of the major banks, they spend $10 to $20 billion a year on technology. How are we going to compete with that? Well, in the last 10 to 15 years, you had the advent of cloud computing, which enabled smaller firms to have the scale of technology infrastructure as larger firms. And what's changed the last several years, and it's been incredibly exciting, especially for those who choose to embrace it, is artificial intelligence and the ability to really scale and have effectively digital employees, as some people call them, to help our talented professionals, the talented professionals that serve clients, really reach scale and have digital assistants. That's where we think things are going.
And on the AI point, you know, these smaller firms they're almost echoing what you had in the 80s of sort of personal tele-relationships where people remembered who you were. How do you keep that in place and keep the benefit of a personal team while also using AI to help you scale?
It depends on the market segment you serve, of course. I'm a believer in this, and there's debate about this, that in the wealth category, in the United States, for example, people, let's say, that have $10 million, a lot of money, that category, there'll be tremendous innovations that have occurred already and will continue in terms of digital advice and people wanting to serve themselves with platforms that have a tremendous amount of intelligence. On the higher end, which is where we really operate in, these digital tools will help that advisor be more systematic in the advice they provide. It'll allow them to have more time on what really matters, spending time with clients, rather than trying to shuffle papers and move things around. These digital assistants will allow quite a bit of scale. We're seeing some of that in the early phases, especially in areas of compliance and operations. And we gradually see this moving to the area of advice and making sure that the advice provided is consistent across clients, and it also allows, again, these people to really spend time with clients at a human level, which is what clients really value, is the quality of advice, the time of delivery of that advice will be increased, and then spending time human to human.
And I guess in this context at the moment, in this environment, small firms have got a slight advantage here. So perhaps it's not a perfect answer to this, I don't know, but with small firms, would you say they should avoid trying to push for ambitions of larger builds and larger clients and larger money and just retain that small size, or what's the advice there?
Well, Liam, we'll see how things shake out. My view is the world is changing very rapidly. You can have a company with far, far less people have very large scale and compete with very large companies. You've seen this in other segments, and I believe you're going to see it increasingly in finance. If you go back 25 years and you look at the firms that dominated investment management or wealth management, they had to have lots of people just for processing investment trades. For the whole operations and back office and middle office operations required hundreds, and in many cases thousands of people. Today, given the business models that are available, ultimately what really matters is the advice we provide clients, the quality of that advice, the experience that client has with us, making sure that you retain and inspire people within your firm that can deliver that. And the last segment that you're really highlighting is 25 years ago, it was impossible for a firm of our size, for example, with 25 professionals, to serve the clients that we do today. Cloud computing combined with AI enables enormous scale. And in some ways, it's easier for a smaller firm to adapt culturally to these technologies, where very large firms, at least historically, have had a difficult time navigating a big battleship and trying to steer it towards these new technologies. So we certainly are optimistic about opportunities for these firms to compete at any size for the clients and serve them in a really outstanding manner.
Thanks again for joining us. It sounds fascinating.
Oh, my pleasure. Thank you so much for your time, Liam.